And so I think really there's two fundamental questions, and I posted these in a Twitter tweet. The first question is, do we believe that the halvings are the creator of the bull markets? Do we believe that they are the fundamental reason that the bull markets are created? They have this amazing power of creating these bull markets. And second, do we believe that this bull market, like the last three, will end very quickly? Okay.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Fred Krueger takes a look at the case for a super cycle, and we try and estimate how high we go and the best way to play it.
So let's take these questions independently. Now, first question is the halvings. Are the halvings important? Well, I would argue the first halving and the second halving were very significant, right? Because they were an enormous amount of supply was reduced, and especially with the first halving, there wasn't an enormous market before the first halving, the more enormous secondary market for Bitcoin. So this is really how Bitcoin was produced. And so when we had this massive supply shock, it made an enormous difference. If you go to now to 2028, there's going to be a supply shock, and I use the word supply shock in air quotes, of going from 450 Bitcoin to 225 Bitcoin. Now, perhaps the price of Bitcoin will be a lot higher, but still, we're talking 200 Bitcoin per day. This is nowhere near as much as it was, say, in 2016. At this point, 95% of the Bitcoin has been mined, and I think the impact of this supply shock of halving will not be as big. So it's just not clear that the next halving will create another bull market in the same sense. And I think what will create it is much more likely just liquidity and financial adoption by TradFi, right? And I'm not even sure of that, right? So what I'm trying to say here is that the mechanism of bull market is created by halving, not so clear, right?
Bitcoin whales continued to buy the dip as BTC price weakness saw a slip below $60,000. Data from on-chain analytics platform CryptoQuant, uploaded to X by contributor Axel Adler Jr. on October 11, shows that whales have accumulated 1.5 million Bitcoin over the past 6 months. Bitcoin whales are wasting no time increasing their BTC exposure, a trend in place almost constantly since March's all-time highs. Analyzing known whale wallets that do not belong to miners or centralized exchanges, Adler confirmed a clear strategy employed by large volume investors. 1.5 MBTC has been accumulated by whales, with greater than 1K BTC on balance, over the last 6 months, he said. There's really nothing to discuss here. Adler acknowledged that some smaller whales, with less than 1,000 BTC, have been selling over the same period. Zooming into the most recent price action, CryptoQuant shows that other classes of Bitcoin investors have also been selling at a loss. In particular, Bitcoin speculators, also known as short-term holders, STAs, have repeatedly sold coins at a loss on exchanges in 2024. As BTC/USD slid below $60,000 on October 10, Adler uploaded a chart of steady profit and loss, P&L, on transactions to exchanges. He reasoned that the biggest whales are feeding on these coins. Don't believe that whales accumulated 1.5 MBTC and wonder where they got it from. How about taking a look at the loss-making sales on exchanges? He wrote. In the last 24 hours, 24.1 KBTC were sold at a loss. ST entities, which are wallets hodling a given amount of BTC for up to 155 days, are well known for reactionary buying and selling behavior. BTC price volatility in given direction can result in a rapid sell-off or buy-ins by the cohort, as evidenced by their response to Bitcoin's recent trip to $66,000. Still, fellow CryptoQuant contributor Darkfost said whale accumulation between $54,000 and $68,000 was significant. New whales are entering the game and accumulating strongly, while existing whales are also increasing their positions, he concluded in a QuickTape blog post. Overall, we're seeing all whales accumulating in this price zone. Their growing balances suggest that a potential upward move could be on the horizon, either in the midterm or long term.
I think what happens in these bull markets, we've had three of them, it's not an enormous amount of data, right? We have three bull markets, is that we have a very unsustainable exponential rise. And it really is exponential, and I think Giovanni's pointed this out very well. It's going up by 1% per day, and it's this sort of exponential thing. The bubble will pop, you know it's going to pop, and it does pop. The problem is you just don't know when it's going to pop. But if you get into this kind of hyper-frenzied vertical movement like we've had in 2017, you know it will pop, you just don't know when. And unfortunately, the power law, I don't think, tells you really that much about when it's going to pop, because we still haven't had enough bubbles, and I think they're just notoriously hard to time, in my opinion. And I'm not sure the math does that much good in terms of when bubbles will pop. And I think that's true with Bitcoin. I think that's true with smoking chicken fish or NVIDIA. I don't know. There's a lot of bubbles that happen, and you know they're a bubble, but you just can't tell when they're going to pop. So the answer is I don't know. And I think if we get in one of these exponential bubbles in 2025, and I see that we may get into one, right? There are a lot of elements for us to get into one. Trump getting elected, the adoption of a Bitcoin standard, the change in the SEC, Dubai starting to stack Bitcoin. There could be a number of catalysts that really bring us into like a full-blown just mania trend like we had in 2017. And if we do get into that, I don't think math tells us really, we're going to stop at 200,000 or 250,000 or 300,000. We might go to 500,000. Now, I do think the math tells us with the power law that kind of 500,000 would be kind of the top in the next couple of years. Why? Because 500,000 would be kind of 2 times trend line, and we've never seen any of the previous bubbles go beyond 2 times trend line. Just doesn't seem likely. And it does seem that if anything, the percentage to trend line seems to be diminishing. So I would say 500,000 would be a high. It's still within the power law. It's not like all our models are going to be broken because you hit 500,000. But it could happen, right? And if it happens, when it breaks, I do suspect that just like any bubble, we will revert back down through the trend line, and we will stabilize at something like 1 standard deviation down below. And that would be just extremely painful. That would be a 75% retracement from the high. It's going to be brutal.
Bitcoin has declined today due to signs that its derivative market is overleveraged. Notably, the past 24 hours have witnessed Bitcoin's open interest levels exceeding the critical $18 billion threshold, a zone that historically signals potential market corrections. On the other hand, funding rates are not particularly high, explained CryptoQuant-based analyst Atekin, adding, they are slightly above their 200-day SMA, with long traders being dominant, which is unsurprising. Historically, funding rates have turned negative with major corrections, often before significant price increases. The Bitcoin market may soon see some long liquidations, reducing open interest and setting the stage for the market's next move. Since funding rates aren't too elevated, any price correction that occurs will likely be relatively shallow. Bitcoin is retreating from its resistance confluence, which comprises a descending trend line and the 50-day exponential moving average, 50-day EMA, the red wave. The price now holds above its current support around the $60,000, $60,500 range, a crucial level to hold to prevent further declines. Concurrently, its Daily Relative Strength Index, RSI, has bounced after almost hitting its oversold threshold of 30. These indicators point to a possible recovery period ahead, with Bitcoin eyeing a rally toward the 200-period EMA, the blue wave, at around $61,800 over the next days or weeks. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.